and they found you amusing for a while, the people of this city. But the one thing they love more than a hero is to see a hero fail, fall, die trying. In spite of everything you've done for them, eventually they will hate you. Why bother?
start trading this. So let's look at the markets here. Okay, we're going to look at a couple things today. Obviously, it's going to be an overview of the week. Are we still in this government shutdown here? I think we still are. So I just dropped a new YouTube video as well, guys. If you want to check it out, it's completely fine. But what we're going to do is let's go over first. Yeah, we're still in this government shutdown here. So government shutdown here still. But the important dates are kind of, you know, what we need to really worry about. The key dates. This is what I kind of want to take a look at here. I hate CNN. I think CNN is filled with lies and just garbage and just bullshit, to be honest. And I see your guys' chat as well now. So I didn't see it before, but I see it now. So you guys are chatting. I can finally see it. But let's talk about first what I think about here with the key dates. Okay, air traffic controllers. They missed their first paycheck. That was 6 days ago. Military paychecks are starting to feel it now. Okay. Hold on. Let me lower the music here. Let me lower the music. Can you guys hear me better now? You guys could probably. Can you guys hear me now? Okay, cool. Perfect. Okay, good to go. Okay, so let's get back into this. Key dates here with the government shutdown that I think is important that we all need to take a look at. Military paychecks, that's the first thing. The Trump administration to allocate about $8 billion here. That right there is definitely not good. We already spoke about this though the other week. Obamacare premiums increase and SNAP benefits. Food aid. This is definitely going to take a hit on the data. Election day tomorrow. Governor races, Virginia, New York City. That might have some manipulation. Federal workers live there, but the shutdown hasn't been a huge focal point on that. November 5th, so in 2 days, this becomes the largest shutdown in government history.
Power of the sun.
Originally passed, but the Senate never did before the shutdown. This right here is interesting. It's hard to really understand this here because you guys already know that I'm a very big fundamental trader, and most institutions and banks, right, trade fundamentally, right? So when we talk about like the institutions and the banks here, it's very, very important. It's very, very important to kind of understand how fundamentals work as a whole. And it influences everything. But because we have no data, it's hard to influence. I believe the data is a lot worse than expected. So the government shutdown will increase, okay? Will bring price stability to the upside, but then also shoot it to the downside here, okay? That's key. So what does that mean? That means that once the government shutdown and the data comes out, the markets are going to drop significantly. ADP, non-farm employment change. Are we going to get this here? Are we going to get an NFP report? If we don't get another NFP report, guys, the market's fucked. And the reason why is because NFP dictates trends. So if we're bullish or if we're bearish for the month, market directional bias, that's what I call it, is all dictated off of what? NFP, our market directional bias. So our monthly directional bias is dictated off NFP. And right now the NFP reports here says that last month we were negative, this month that we potentially added more jobs. But we don't really know. We don't really have that data. Will we have NFP data this week is the $1 million question. Probably not. I'm looking at it now. Tentative. The last report we got was September 5th. I mean, the reason we had historic rate cuts was because of this. Okay, was because of this. I think something that's interesting, guys, we might actually head into not a recession, but a market downturn. There was an indicator recently that talked about potential the inverted yield curve. I don't know if it was the inverted yield curve. I'm trying to figure out what recession indicator was it. It wasn't a recession indicator. I forgot what indicator it was. Give me a second, guys. I'm gonna look for it. Because I want to show you guys. This is what it was. The Heidenberg Omen, an indicator that correctly detected the 1987 and 2008 stock market crashes, have been triggered. Okay, so let's research this, because if we're not looking at fundamentals, let's at least look at this indicator, the Heidenberg. Okay, the Heidenberg Omen, an indicator. Okay, the famous Wall Street crash. Okay, an omen or a false alarm. Let's take a look at this. The Heidenberg, okay. The Heidenberg Omen flashed twice, signaling a potential stock market decline within 40 days. This is actually what I predicted 3 months ago. I said, guys, that November and December, if we don't have rate cuts, guys, we're going to have massive market drops. Okay? Just hands down. Hands down. There's nothing leading to, okay? There's nothing that cut by the end of this year. What does that mean? A pullback is near. There's profit taking that's going to be happening. Without a shadow of a doubt. We're seeing it now in live time. Okay? So what I'm looking at next right now because of this is very simple. Flashed twice at the end of October. Serious decline within the next 40 days. We're in need of a serious decline. This indicator is said to also proportionate the 1987 and the 2008 stock market crash, making it popular among non-mainstream analysts. Okay, which sometimes leads to downturns, sometimes there's no downturn at all. The indicator is a sign of trouble. The 10-week moving average is rising. New highs and lows are greater than 2.2% of the list. Okay. Who caution is now time for worry. Interesting. Well, I mean, I'll tell you guys, the last government shutdown, leading up into the government shutdown, we were bearish in 2018. You remember that, right? So, all right, let's do some market markups here. Now that I've kind of have an idea of what's going on with the market here, let's mark up some charts here, guys. Let's mark up some charts. Because, to be honest, if we get something like a 2008, it wouldn't be a surprising scenario. People freak out about market downturns. 2008 was like a 45% crash. right? What did we have with, I think it was 2022, the silent recession was a 22% crash. Oh yeah, markets are going to sell off 100%. 100%. Do you see this on the weekly here? This right here is an accumulation. 1,000%. We're going to sell off. We're probably going to break this structure and go back by this zone here. So what I predicted in March of this year, just with basic fundamentals, is happening again. Wow. You don't catch lightning in a bottle twice, guys. So that's pretty ironic that everything I said that would happen in July and August came true. Everything I said that in March would happen came true. And everything I said that happened 2 days ago came true. I'm not trying to toot my own horn, guys, but it's just the data, right? It's the data. So, and when you understand fundamentals, it's very clear, right? What happened? Dixie moved to the upside right after this zone here. It's going to mitigate. But what more importantly, what did it do? It already broke structure here on this section, right? Did we have a break? Not yet, not yet. So we have some potential downfall. Okay, so now let's look at what's going to happen with Dixie next. Okay, so Dixie now is moving to the upside. It's 1, 2, 3. There should be a good heavy correction. If we break or close above this section here, then we're going to see some downturn, but markets are going to move way to the upside regardless. Okay? That means some downturn, most likely into this indecisional candle here. Some turnaround, maybe some market booms to a pullback, and then a fall for the rest of the week. Okay, external buying zone, that's what I'm looking at here on the 4 hour. 4 hour looks, 8 hour, 4 hour looks a little bit messy on external here. But that's what I'm looking at here. The next section that we're gonna aim for here, this is a very weak high. We're coming here. I'm pretty confident we're going to wipe out and take out this high here. No problem. So what does that mean? That means most likely prices are going to move to the upside here. We've already mitigated this interior zone. You see that? This zone's been mitigated. This zone here has probably been mitigated by the indecision, and order block mitigated this. So this thing is going to continue to the upside here regardless, most likely. But if we do see some downturn, you're going to see it either here or come to this external structure point here. And then you're going to move and see it all go even higher to the upside. Any type of retracement will actually catapult this thing higher. Let's check volume. I want to check volume. Wow, volume's down. It's not even up really yet. So we haven't even seen a big shift in volume yet. Buying volume's been dying down. But as volume starts to push up, I still see buying volume in momentum, to be honest. On higher time frames on the daily, you're seeing buying volume probably going to take over here soon and shortly. What I'm looking at next, guys, here is Dixie to mitigate that zone there. Okay, so I am bearish, not bully bearish. I'm somewhat bullish on some stocks, but a pullback because I'm looking for a pullback to sell and short SPX this week. And I mean, this is kind of ironic too, because this is what I'm looking at here with Dixie. What's going to happen with Dixie is we're going to move to the upside. We're going to break some structure, but then there has to be a pullback. In that pullback, SPX is going to move to the upside. Okay? But SPX is only going to move to the upside for so long. If it drops all the way down here, SPX might create a new higher high. It might. We don't know. The inversion might be different. Okay? Or at least equal highs here. Right? So if that ends up happening, Dixie will still, it'll go here and then maybe come back up to this equal high zone and we could take some profits there for a buy, but then might come lower. The reason why is because of what? Dixie looks like it's about to break 8-hour structure. It looks super bullish. It looks like it's about to actually break daily structure. This thing is on a shift here, guys. This is on a shift. The good news is, okay, we're about on our third wave to the upside. right? You see that? We're on our third wave to the upside. That's the good news here. But I'm not going to lie to you guys. This is very bearish for markets. Very, very bearish here. I'm just being honest with you guys. I'm thinking we're gonna go lower than this. All right, so I'm gonna shoot this to you guys here real quick. I know what's gonna happen. In my belief system. Okay, this is what I believe is gonna happen. I believe we're gonna break through this here most likely tomorrow. If not, tap it, then see some influx to the upside here. We're in order flow here, right? But most likely we'll break it. And if we do end up breaking, we're coming lower to this zone or most likely here. I'll trade this tomorrow morning. I want to see what the range gives us here, the Asian range, but we need to fill in this gap. 100%. We do need to fill in the gap. And we're already breaking the Asian range from earlier today, right? So this for me is a very simple trade. I'm looking at this to be bearish here and to continue on its bearish run, and I'm pretty sure we're going to go to 67.40. 67.40. That's what we're going for. So because we're bearish on this, it gives me an idea. Russell will most likely bearish in. I did call some buys here, a couple days ago to the upside here, but I'm more bearish on Russell than I am now more than anything. It looks like Russell's actually about to start turning around here shortly after creating some all-time highs a few days ago. It looks like, you see, when you have volume kicking, I'm going to give you guys a lesson here. When you have volume really kicking up, the impulse moves are great. The corrections are sure. The impulse moves are high and the corrections are sure. But one thing I want you guys to realize now is the impulse moves might be a little large, but the corrections are larger. The impulse moves are shorter. Corrections are larger, and now the impulse moves are getting smaller, and it's almost compressing like it's getting ready to drop. Okay, this right here is a sign of a market shift coming. Lower demand. That's what you see here on a higher time frame. You see what I'm saying, guys? It's only a matter of time until at least this structural point is broken, or this structural point is broken on the daily. Once you see that, we're going down, guys, and we're shifting trend probably at least here or at least to here. That would be a solid correction of a solid 12%. Okay, so you're starting to see that now. And it usually happens around the end of the year, especially around November and December. And the reason why, specifically December, is there's nothing that happens. Institutions close books. They're ready to go home. There's no trading. Everyone's freaking cold. Give me a second, guys. Let me figure out what the problem is here. Let me figure out what the main problem is here. Okay, I think it might not be working. Or is it working? Can you guys hear me? Yes or no? Drop a 7 if you guys can hear me. Yay or nay? Oh, this is so annoying. Okay, cool. Perfect. Alright, so what I'm looking for here is a short. Okay? I'm looking for some shorts here. On gold. 100% I'm looking for shorts. Tomorrow morning I'm looking for even more shorts here. Gold's gonna short. If we have a close here, we're gonna break structure to the downside here. If not, if we don't have a close here on the 3-hour or 4-hour candle, it's just going to most likely come back up here. Okay, make maybe one last high to swipe this area and then move down. But right now, we're gonna follow structure. Gold's gonna short most likely downward. The only way this would change is if let's say markets go into a panic, okay? But right now I just want to follow structure conservatively. GU has been shorting since we called more shorts on GU. Looks like it's in reaccumulation. I don't want to do anything with this. Not worth it. Why would I get into some trades here to catch 50 pips? It's not worth my time. I don't want to catch this. I don't even want to worry about this. This thing has been in, honestly, reaccumulation. It might even move to the upside. This thing is consolidating. Not worth your time. Okay. Let's go to USD CAD here. I got stopped out at USD CAD at a break even. Okay, I'll be honest with you guys. You know, I called this. I said, guys, we're getting in this here. Stop loss to break even. Bang. Okay. So what am I looking at next with USD CAD? The one thing that USD CAD pisses me off about is that it's constantly shifting trend. One day after another. One day it's moving to the downside, another day it's moving to the upside. It's constantly shifting trend. This right here was solid because we had a swipe of liquidity. I thought this could have been a nice solid pullback for us to make an extension to the downside. But it looks like this was just order flow. And we finally broke that order flow for an extension to the upside. What I'm most likely going to look for is buys. I can only imagine what's happening in Canada right now. I don't follow enough Canada news, guys. So again, like I don't trade USD CAD every day. Like you got to understand, I maybe take 1 or 2 trades, but gold's my specialty because I follow the ETFs. You know, at SPX, I sometimes follow the top 7 stocks. With USD CAD, you got to follow what's happening with Canadian monetary policy. I don't know what the hell's going on in Canada. So this probably happened because of what? This happened because of something in monetary policy changed between Canada. Because something happened, that's what created this massive shift. This doesn't just change just for nothing. This right here is caused by a massive shift in trend to the upside here. So I'm looking for more buys. Very simple. I'm going to look for buys tomorrow, breaking out of the Asian range here to the upside. That's what I'm going to be looking for. Something happened in Canada. We can research it here. Let's go look at Canadian monetary policy. I guarantee you, Canadian monetary policy. Something happened. They either hiked rates or cut rates. Something must have happened. There we go. That's what it is. Look, and look, you see, this is why, guys, I feel like regardless of what happens, monetary policy and fundamentals always wins. Because I didn't even say, guys, what happened. I just said something with fundamentals and monetary policy happened. And look at this. This happened 5 days ago on the 29th. And look at this. On the 29th was the low of the week. What was it? Monetary policy change. Bank of Canada lowers interest rates to 2.2%. Why do economies and countries lower interest rates? Why does that happen? It happens because the Canadian economy is suffering, and Canada is going through a problem just like we were going through a problem. The only difference is their unemployment rate is way higher than the US, right? It's a lot higher than the US. Because of that, you're now seeing it. There's a lot of warning signals being sent out. Yeah, so guys, this makes it so easy because with Canada, guys, if Canada's rates are lower at 2.25% and the US dollar's rates are at 3%, right? 3.25% or 3.5%. What does that mean? What does that mean? That the Canadian dollar's rates are lower. So that means the US dollar is more valuable. So what does that mean all month? That means USD CAD is a buy. USD CAD is a buy because the dollar, because the rates are higher on the dollar, that means USD CAD is a buy, guys. Do you guys understand what I'm saying? Do I need to say that one more time? Okay, USD rates are 3.5 to 4. Canadian rates are 2.2. What does that mean? The dollar is stronger and more valuable. What does that mean? That means all month USD CAD to buy. Probably till the end of the year. This is gonna be the easiest thing to fucking trade. When you have one country's rates lower than another country, this thing right here is the easiest thing to fucking trade, because unless the US dollar cuts rates later this year, but if they hold still, which I'm pretty certain they're gonna hold still, guys. We can't afford another rate cut, right? Look at your chances here. If I'm gonna make a bet, I'm probably gonna start trading USD CAD, start dropping some 10 lots on this thing. Why? What are the chances of us cutting more rates? December? Actually, wow, this increased 65%. Holy shit, this increased a lot yesterday. We might cut even more rates. That's crazy. Oh no, we're gonna stay the same. We're at 350 to 375, right? So there is a chance that we do cut in December. There is a chance, actually. Because we're at 3.75 to 4 right now. So as long as we don't cut here in December, USD CAD though is bullish. What does that mean? What does that mean, guys? I'm looking for buys on USD CAD. The dollar is stronger and more valuable. Okay? What does that mean? I'm going to be looking for buys on CAD. Okay? That's what I'm looking for to the upside here. Okay? And we have a break of structure on the daily. This thing is going to come most likely. Okay, so we're bullish on USD CAD. But how many pips is that? 146 pips? I'm sorry guys, I trade. I need to drop like what, like 10 standards or 30 standards in order to get the same type of result that I would with gold. Okay, so now let's go to, I gotta go guys, I got another call here. Let's go to Bitcoin though. I've been calling, remember I was crazy for shorting here, right? In the words of 6ix9ine, I speak facts, right? They're gonna skip this part though, right? Right? They're gonna skip this part. In the words of, how do they say it? In the words of 6ix9ine, I shouldn't even be talking like that, right? I shouldn't even be saying that, right? I shouldn't even be saying that, but I like to make jokes, right? So like in the words of 6ix9ine, I speak facts, right? Remember when they called me crazy for shorting here at 124? Then shorting here at 115 and giving the signal? Remember they called me crazy? I speak facts though, right? Okay, what are we looking at next? This right here, Bitcoin's technically, yes, I'm still looking at 98K, but this is what I'm looking. This is what I'm looking for. I need to see a break here first. I need to see this break. This hasn't broken yet. So Bitcoin might actually turn around here if it doesn't break. We need to see a break here, 100%. If not, this thing isn't going to drop down. So hopefully we see a break in the next 1 or 2 or 3 hours. I don't want to see a turnaround here. I don't. I want to see a break. And then once I see a break, I'm going to look for more shorts. And another shorting opportunity is going to be most likely here. But I need to see a break first. Okay, I need to see this break to the downside. If we see that break to the downside, that'll solidify this on the daily. Okay, and solidifying that on the daily will for sure bring it back down to 101 to 98K. Now, what does that mean for us? If on the weekly we get a close below 100K and we stay down here for over a week, I don't want to say the bull runs over, but Bitcoin will explode back to 109 and then probably come back down here to like 78, 76K and then break that structure. Which could mean a potential, right now I'm looking at a potential, right, 10% drop, then a run to the upside, 3 or 4%, but overall I'm expecting a 29% drop even more on Bitcoin. And from the area that I called sells, and I said that this might be the top, that would mean a drop of about 40% in Bitcoin price. Why? I don't know. Maybe I was right. They're gonna skip this part though, right? They're gonna skip this part. They're gonna say I was crazy. Okay. MicroStrategy, my stop loss got hit, so I don't really mind about that. Coinbase is still up. I would get out at some profit from Coinbase. Alright guys, we're gonna be trading live, but I appreciate y'all, love y'all, and I will be talking to y'all soon. And we'll be